global liquidity indicators, again, they're not, I don't want to say that they're not entirely accurate. They're definitely useful. Like they're directionally correct, I would say, but they aren't as helpful as people think, and they're going to become even less helpful when we approach the cycle top. This is something that was actually explained by Lyn Alden. Like this is not just me like, making this up out of the blue. It's actually based on a very fascinating report by Lyn Alden from a couple months back, specifically back in September. So Bitcoin's correlation with global liquidity is high, but not immune to short-term deviations caused by idiosyncratic events or internal market dynamics, especially during periods of extreme valuation. In plain English, what that basically means is that during a crypto bear market bottoms and crypto bull market tops, Bitcoin tends, and crypto in general, tends to decouple from liquidity. And we can actually see that if we go back here, for example, this real-time liquidity chart here, you can see that Bitcoin will actually go above, like basically liquidity flattened out, but Bitcoin continued to rally during the cycle top. And then during the bear market as well, you can see that liquidity started to rise, but Bitcoin's price was still like in the toilet, basically, right? So there's a lot of basically like extreme, like it was saying, is idiosyncratic deviations near cycle tops and near cycle bottoms, and these can last for quite a while, like for multiple months. So again, everyone's looking at this chart, for example, like going back to the lead lag, whatever. Everyone is looking at this chart here, and I'm sure some people are saying, oh well, we're seeing, it looks like liquidity is going to flatten out sometime over the summer, which means that the price is not going to be rallying as high. Of course, this is also another common narrative, is that, oh, global liquidity is not rising at a rate that is as rapid as it was before, so therefore the crypto bull market will be muted, or altcoins aren't going to rally, or insert whatever narrative you want there. But again, the thing is that during cycle tops, Bitcoin and crypto as a whole will actually decouple. Again, according to Lyn Alden, who's like very highly respected macro analyst, who's really deep in the weeds on this stuff. She basically found that, hey, like there is a kind of like a decoupling, like a bullish decoupling and also a bearish decoupling during cycle tops and cycle bottoms respectively. So again, key takeaway being that this is super useful, especially during periods like this. But as we approach the cycle top, I think you're going to see Bitcoin and crypto decoupling from liquidity to the upside, and everyone's going to be like, oh my god, like what's going on? Like, is this some kind of breakaway trend? Or maybe people will just stop talking about these charts entirely, or maybe the people who are making these charts will say, hey, Bitcoin's getting ahead of its skis here, it's going to need to come down and come down just like this liquidity. But then Bitcoin doesn't come down and just keeps going up, and everyone's wondering what's going on, right? Again, historically speaking, that would actually be pretty normal. Key takeaway, this is just like, I guess, the first half of the video, you could say the key takeaway here is that be kind of weary of these liquidity indicators, because it's not entirely clear if Bitcoin leads or if it lags. Some indicators suggest that it lags, other indicators suggest that it follows. And if you like pay attention to like macro announcements, like I don't know, like CPI or Fed or whatever, whenever there's like a bullish macro announcement that would result in like more liquidity, crypto tends to rally. Like right now, like it's almost like pricing in the liquidity before it even happens, if that makes any sense.